I'm Owen Bigland. This is the Inside Edge video blog. Okay, by popular demand, last month, the socialist liberals, Justin Trudeau, our finance minister, Christina Freeland, announced a capital gains tax increase from 50%, which is our current rate, to 66.5%. Now, the first $250,000 will still be taxed at the 50%. Anything above that will be at the new rate, close to 66.5%. Now, of course, they were a lot of smart business people, economists that know about money and economies told the Liberals not to do this, that it would be counterproductive in that any additional tax revenue you take in will be more than offset by a flight of capital, money leaving Canada, job losses, lack of productivity, which has been sliding precipitously here in Canada for over a decade now. But of course, just like all good socialists, they don't want to listen to anyone who knows anything about finance or the economy. I mean, we've got a finance minister here in Christina Freeland who has zero background in finance. I know it's hard to believe, I'm not making this up. She was a literature student of some sort and has no background whatsoever. It shows. Just listen to the way this woman speaks. She's off her rocker most of the time. It doesn't make any sense at all. She's dumb. But this is the way what we've come to here. Now, again, they were told not to do this, but they don't care. It buys them votes because the narrative from the Liberals is that we're going to tax the rich. They can afford to pay a little bit more. It's only going to affect a fraction of 1% of Canadians, this increased capital gains tax. And they can pay a little bit more. Well, the socialists only give you the one side of the story, just like I've talked about many times with David Eby here. He's a fantastic socialist, knows how to talk. Well, it only gives you the one side of the story and not the repercussions of the taxes and the restrictions that they put on. So, as it turns out that it's not going to affect a fraction of 1%. It's going to affect a lot more Canadians than that. Capital gains tax, unlike taxing your income, because we were comparing it to taxing income, where a burger flipper pays the same tax as a house flipper, which is completely ridiculous. What the Liberals don't understand, and what a lot of smart economists started coming out with this, is that, one is a tax on labor, the other is a tax on risked capital. And that's what the Liberals just don't seem to understand. You are buying a house or buying a business or buying equities with after-tax dollars that you're putting at risk. There's no guarantee you're going to get a return on that real estate investment or that stock investment. It's risked capital. So of course it should be taxed at a much lower rate than working capital. But the Liberals' eyes just glaze over on this. It's going to affect a lot more people than Canadians than people think. Capital gains tax isn't a yearly thing. It's kind of a once or twice or three time in your lifetime tax that you're hit with. Selling a house or selling a vacation home or selling an investment property or selling a business or a law firm or a dental practice. What a lot of people came out with, what this is going to do, it's going to slow development. It's going to slow productivity. It's like everything the socialists do. They want to tax demand instead of working the other side, the supply side, the productivity side, create jobs, create a business environment that companies want to invest in. And when you start rationing up the taxes to these extreme levels, guess what? They just go elsewhere. Why would I put my money into Canada when I can get a better return on it in a place like the United States, where the taxes are much less? So, I'm not a fan of the capital gains tax increase. It is what it is. What I would tell you guys, and I should point out here, an article in the Globe and Mail here this was from yesterday. Looming capital gains tax changes spark unprecedented rush in BC property sales. So this new capital gains tax rate will come in June 25th. So it's already come into effect here. So what this did, though, from the time they announced this a month and a half ago, it's pushed a bunch of sales forward to try and get them closed before the June 25th deadline. Well, as the Globe and Mail and a couple of media outlets have pointed out, this is exactly what the Liberals wanted to do. This was the game plan. They know deep down that this capital gains tax increase is counterproductive. It'll cost Canadians way more than any revenue they'll bring in. But it's a bit of sleight of hand here. What they wanted to do was push forward a whole bunch of capital gains tax, which this is done. Remember, they're still paying it at 50% here, which of course is going to look good on the budget next year because it's going to push forward hundreds of millions of dollars in tax revenue, which will look a little bit better on the books, which our books, as you guys know, are a mess. We are running massive deficits in this country. We're in a recession. We apparently now, I mean, what is it? $65–70 billion a year just on interest payments on the debt alone. So this will help. It'll push forward a whole bunch of capital gain, which will look better on next year's budget. And that's probably correct. That's what the experts are saying. But again, what I would tell you guys is, you see, the Liberals are in dire straits right now. They want to do anything to try and make look like they're helping the struggling, the middle class, anything other than multimillionaires, which that's what they paint this capital gains tax. It'll only be effective on the ultra wealthy, which is wrong. It's a lie. But this is the game plan. To some people, they'll just look at this and say, hey, that's a good idea, tax the rich. But of course, they don't understand the fallout from this stuff. Money leaving the country, businesses not expanding, businesses not hiring more employees, capital leaving the country. Again, it kills productivity, just gets our deficits running higher. And that'll be the fallout from this. But I think next year, guys, we've got an election, October 2025. We should have called an election way before that. But of course, the Liberals, Justin Trudeau's ego is way too big. He won't do it. But October next year, we'll have an election, and they're going to be kicked to the curb. And so don't be surprised if the Conservatives, if they'll be in power, they will more than likely roll this back to the 50%. So I would say you miss the window now to try and sell before June 25th. Just hang on for another 18 months. Wait for the Conservatives to get into power, which they are. They will have a majority government. And chances are they will roll this back to the 50%. So that's what you should do. In the meantime, though, of course, for the next 18 months, we're going to lose jobs, lose productivity, and we're going to have a flight of capital out of Canada. The last thing I'll tell you guys here, just a little off topic. On my Saturday blogs, you guys know, or if you've read my book, this is a prime example here of where you want your money invested, and it's not in Canada. Outside of my real estate portfolio, which is all in Vancouver here, and I'm happy to hold those properties. And I'm not planning on selling anything, and I'm pretty certain by the time I do, this capital gains tax will be back down to the 50%, and I'm happy to pay that. But I've talked about this on my Saturday blog. If you've read my book as well, 85% of my retirement funds, my stock portfolio, is outside of Canada. Probably 75% is in the US, 70–80%. Another 5% is in maybe Europe or emerging markets. And then the remaining 15%, 10 or 15% is in Canadian equities. All of them are in unregistered accounts, cash accounts. And I only hold, it's a very simple portfolio. It's a handful of bank stocks, all the Canadian banks, BCE, TELUS, XEI, and XIC indexed Canadian in the TSX. And that's it. And I will probably continue to shrink that even lower. And thank God I haven't been much in Canada over the last 10 years because I've got very poor returns out of Canada, and that's not going to get much better. Corporations here are taxed to death. They now have a windfall tax on anything over $1 billion in profit, which is crazy. So the only reason I hold Canadian equities is for those nice yields, those dividends. I'd say my average yield on my Canadian holdings is probably running just over 5%, which is pretty nice. I mean, Bell Canada right now is paying about 7.5%. But that's all it's good for. I mean, you might eke out another 1 or 2% in capital gain over the next 10 or 15 years annually. But once you're retired, hey, it'll give me a nice dividend stream to use for my retirement funds, but that's all it's good for. And you're going to see this accelerate. I'm probably going to, over the next few more years, probably sell down another 5, 6, 7% of my Canadian portfolio and just put it straight into US equities, because that's where the money's at. That's where you get the appreciation and a fairly decent yield, probably averaging maybe about a 2.5% yield on my US equities average. I've got a lot of tech stuff that doesn't pay a dividend, but I sure make up for it in the capital gains, the capital appreciation. So you're just going to see more of that money leaving Canada and going to the United States, and I'll be right there with them. There's not much of an incentive here to be investing in Canada, and it's getting worse, and a move like this is going to accelerate that problem. But it's something that the Liberals and Christina Freeland will never talk about. They only give you one side of the story. I think smart people understand what's going on. If you did half an hour of due diligence on this, you'd see that a lot of smart people here are saying this is a dumb move and it'll be counterproductive. But it is what it is. This is socialism, creeping socialism that we're under now. We're in some strange times here in Canada. I might have to do a Saturday blog on this in more detail. But I'm still a proud Canadian, and I still think there's hope. The Liberals will get kicked to the curb here next year, and hopefully we can start in a new direction where we start enticing businesses to invest in Canada. Less taxes, less bureaucracy, smaller governments. Have you guys seen the size of the government since Trudeau has been in? It's been bloated. It's expanded huge, which we should be doing the reverse. So capital gains tax, it's increased. If I were you guys, if you didn't sell already, it's too late. Hold off another 18 months. It'll be rolled back by the Conservatives back to the 50%. I'm Owen Bigland. Thanks for watching. See you next week.